All right, somebody make this make sense. There's a story of buying power, margin, options, and buying stock outright. So recently I had some buying power increase because of an options event. And I was planning on making a video about the wheel strategy. So let's back up here a little bit about the option. So the option was on the ticker symbol O, which is a real estate investment trust. They pay out dividends every month. They're a nice steady stock that pays dividends that you can get into. So last October, I sold a put for $60 and I was forced to buy 100 shares of that. So I spent $6,000 in total getting into that deal. So I spent $6,000 to purchase those shares, and I also received $55 to get into that deal. And later on, after I owned 100 of those shares of O, I decided to turn around and sell a call on it at the $62.50 strike price. Okay, so then now that I owned 100 shares of O, I decided to turn around and sell a call on it. So I sold the call at $62.50, and it expired yesterday in the money. So then I was forced to sell my shares, 100 shares, at $62.50. And I also received $10 to get into that deal, by the way. On top of that as well, while holding those shares, I received some dividends, and those were $108 over time. So overall, I made about $424 to the good on that whole deal. And so my plan was to do the wheel strategy where I could just turn around, and now that I don't own any shares of O anymore, I like to buy 100 more shares. So with that buying power freed up from those shares, from the sale of the shares of O, I'm thinking, oh, just do this again. So I can look for O. Realty income. I might have to search for that. And then click on trade options. And I was thinking, okay, so let me just pick expiration date, click on sell, click on put. For example, let's look at the $65 put. If we click on that, and you think, okay, great, let me click sell. I want one of these, and oh, wait a minute. I only have about half my buying power available to buy 100 shares of this through selling a put. Okay. Now, check this out. If we don't go that route of doing options and click trade and just straight up buy it, and let's make this limit order 100 shares, and let's do $65. Notice, oh, it's giving me all of my available buying power and not just half. So make that make sense. So I can only do the potential of buying 100 shares, and they only let me set aside half my buying power to do that. So I need to come up with like another $3,000 or something like that in order to push through that sell a cash secured put on this. But they're willing to let me straight up buy 100 shares of it now with using all of my margin and buying power, and it's going to cost $6,500. So yeah, that doesn't make sense to me. Why they let me only use half my listed buying power through an options play in order to acquire 100 shares, maybe, but they'll let me use all of my buying power if I just straight up buy 100 shares right now. So that doesn't make sense to me at all. What do you guys think? And by the way, I use my options profit tracker file to check my numbers for profit and loss on what this would be, and that link is in the description. And you can also find the dividend payout history of O or any stock you want on stockanalysis.com. That link is also in the description. If you like this kind of content, please give me a like and subscribe, and I'll see you next time.